Spotify easily beat Wall Street estimates this morning for monthly active users, clocking in at 320 million, but shares are coming under pressure on some concerns around profits. Let's welcome in Spotify CFO Paul Vogel. Paul, good to speak with you as always. I want to get this information out there as quickly as possible. I was on your earnings call. Take us through what you said on the response to Joe Rogan's podcast.
Yeah, I mean, look, for us, we have millions of tracks and millions of podcasts and content on the platform. Some of the content people are going to like, some are not. You're not going to like. We have standards and policies in place, and if someone violates those standards and policies, they'll be removed. And if not, we'll continue to have a diverse set of voices on our platform.
How has the customer response been? So that the Rogan podcast launched on September 1st, about 30 days in. Are you pleased so far?
Yeah, I mean, the performance has been great. I mean, we have it's now on the platform. We have an exclusivity period that starts at the end of this year and will go on for a period of time. And so we were actually very pleased with how well we've done in the non-exclusive period. It's done better than expected. And so we're really pleased with how the performance has gone.
Spotify had some pretty impressive growth. You had 320 million monthly active users. That was higher than guidance, but you did swing to a loss. Can you outline for us, sort of connect the dots as to why that happened? Are you spending more? I know you are on podcasts. Was that one of the main reasons why?
Yeah, so I think if you take a step back and you look at the numbers in general, I think the quarter was actually a fantastic quarter, right? As you mentioned, we beat MAU, 320 million MAU was above the top end of our range. Our subscriber growth was at the very high end of our range, which are really fantastic. If you look at both of those metrics on a 9-month perspective, we've actually outperformed 2019. So we've added about 49 million net MAU in the first 9 months of the year, which is 8 million more than we did in 2019. We've added almost 3 million more subs in the first 9 months of 2020 than we did in 2019. So from a user perspective, we've done exceptionally well. Then if you look at it from a gross profit perspective, we actually exceeded our gross profit margin expectations for the quarter. We continued to do really well there. Our net operating loss was actually lower than we thought. And for us, it's really about this balance of growth versus profitability. We're very fortunate to be a free cash flow positive company. We generated 103 million of free cash flow in Q3. We're free cash flow positive for the year. We have almost $2 billion of cash on the balance sheet. So our liquidity position is really great. So for us, it's managing that growth and profitability. So we feel like the business is super, super healthy right now.
Paul, on the call, I sense the analyst ears really perking up when they heard that you all were testing price increases. Where are you testing these price increases? What's the magnitude? And what's been the subscriber response so far?
Yeah, so we've, going back a couple of years, we've had some test areas where we've tested, different markets. We tested Norway a couple of years ago, and New Zealand most recently. In those markets, they've done exceptionally well. We've seen no real impact on churn or retention or intake, and so they've gone really, really well. So we launched 7 markets, including Australia and Bolivia, Chile. So some bigger markets, some smaller markets. And for us, it's continued to be a test and an evolution. And so when we think about our business is really about, number one, growing users and subscribers. That's what we've talked about. And how can we grow them profitably? And so for us, it's always been about this LTV to SAC. So what's the lifetime value of our customer? How much are we actually going to generate in revenue and profit from them? And how much does it cost us to actually get them onto the platform? And so for us, it's this balance of, are we bringing them onto the platform? Are they staying for longer? Are they generating more profitability? And if that's the case, we know we have really healthy users and subscribers we're bringing onto the platform. That metric has been somewhere between 2.5 and 3 times since we've gone public. Anything above 1 is obviously a very good number. So we feel really good about that. And so ARPU is just another component into that in terms of generating, the right amount of revenue and profitability. How does it impact retention and how does it impact churn? So we're testing it in certain markets. We have had ARPU that has declined for the past couple of quarters. It's something that we know that people would like to see move higher. It's something that we expect will go higher over time.
Paul, I remember Spotify started out as a place where independent artists and musicians could better compete with the big major music labels. You're now cutting deals with those very labels, including Universal Music Group, which you cut a deal with them for the rights for their label's catalog just a couple months ago. Where does the independent artist fit into the Spotify strategy for you going forward?
I mean, everybody fits in for us. I mean, for us, it's about giving creators the biggest opportunity to expand their audience and to have them have the most success on our platform. So we want to work with everybody. We want to work with the major labels. We want to work with the independents. For us, it's about growth. We feel very excited that the number of artists who actually contribute to the top 10% of artist streams continues to increase. And so you're having more and more artists actually enter that phase. So more and more artists are getting seen. We know our discoverability is high, more artists are being heard. So for us, it's about really helping all creators, whether you're the premier top talent, someone who's more independent, someone who's more niche. How can you reach the right audience? And so for us, we generate tremendous amount of playlists through our algorithms. Those algorithms help give you as the consumer the right content that you're going to listen to, the right experience that you're going to have. And through that, you're going to experience new music, some music you thought you liked, maybe music you didn't even know you were going to like. And from that, you discover more artists. And through that discovery, the artists get wider exposure. And that works for the major labels, it works, and their artists, and it works for the independents as well.
Well, I was looking at your advertising numbers, and advertising revenue actually returned to growth in the quarter during what's been a very challenging time for advertising. I know that overall it accounts for less than, I think, 10% of your overall revenue, but is advertising an area of growth, you think, for you?
So it definitely is. So going back to the first part of your question, yeah, we had 9% growth in Q3, which is actually 15% on constant currency. We report in euro, and the dollar depreciated a decent amount in the quarter, so that actually hurt our business. And so that was up from a 21% decline in Q2, mainly around the COVID and the impact that COVID had on Q2. So we see advertising accelerating in Q3. We're optimistic about where it will go in Q4. And more broadly, yes, we think there's a huge opportunity for us on the advertising side. I think there's a number of ways we can innovate and continue to bring differentiation into an advertising ecosystem, particularly for audio advertising. When you look at the podcast ecosystem, there's been very little innovation in podcast advertising over the last 20 years. So we think by actually leaning into podcast innovation, it's actually a win-win for everybody, because you actually create an environment where you've now innovated on advertising. The creators are able to actually monetize their platforms better by being able to have more relevant advertising on their platform. That's going to be a better experience for the consumer, because they're actually going to hear advertising that's more relevant to them. And so we think there's a huge opportunity. So it is around 10% of revenue right now. We expect it will become significantly more over time, and we're definitely very optimistic on where advertising can go as a percentage of our revenue.
Paul, I have 30 seconds left. Have you seen any impact to your business from Apple's music bundle?
We haven't. As I said, our metrics for the first 9 months of the year have been great. We exceeded all expectations in Q3. So we feel really good about it. And so we haven't really seen anything. We take all our competitors very seriously, but our main focus is always on running our business, on what we think is going to be best for the users, the creators, the consumers. And so no, we've had a really good 2020 so far.
On a lighter note, let's hope the NFL East turns it around, right?
First place at 2-4-1, you can't beat it.
Fair enough. All right, Spotify CFO, Paul Vogel, always good to see you.
Awesome. Thanks, guys.